The S&P, the NASDAQ, better than 2% gains as well. Dom, what do we pick from in this cornucopia of things for Navigator?
What a great word, by the way, and especially for Thanksgiving coming up. Exactly. So let's talk about the election because it's largely behind us. Largely, it's not completely, right? But traders are now turning to what's happening today. The Fed's two-day interest rate policy meeting kicks off today, and it concludes with a rate decision tomorrow afternoon. Our next guest says that regardless of what the Fed does on the short-term rate side of things, longer-dated Treasury notes and bonds should be a key focus. So joining us now is Mike Khouw, the chief strategist over at OpenInterest.PRO. Mike, thank you very much for being here with us. When we talk about using options to trade instruments around this, we're looking at maybe ETFs and the options on them. You're looking specifically at the longer-dated bond ETF, ticker TLT. What's the trade and why?
Yeah, so TLT, first of all, you won't be alone if you're trading this thing. I mean, it traded close to 1.2 million contracts so far today. That's pretty much the busiest day that we've seen in this contract for over the course of the last 12 months. So it's as much activity as we could possibly see. The busiest contract are the 90 strike puts. These ones happen to be expiring just November regular way, so we were seeing a lot of volume in those. Buyers were paying about $1 a contract. And, of course, if you buy puts on TLT, you're betting that the long bond goes down, which is another way of saying that you're betting that the long rates are going to go higher. And really two things are going to propel that, right? So higher inflation expectations over the long term would propel long-term rates. Also, higher growth expectations over the long term would propel higher rates. And it is possible for the Fed to control longer rates. Of course, they'd have to do that with their balance sheet. When we think about Fed policy, we're usually thinking at the short end of the curve. I heard Sem Carson at the SIBO talking to Rick about this only just a few minutes ago on the network. But, I mean, basically the gist of this is that net of higher asset prices, growth, and inflationary pressures, long rates could go higher.
All right, so if that's the case, you're betting on downside price action for this long-term bond ETF. When you're playing the downside of things, typically you want to be long downside protection or to profit when things go lower. That, to me, screams buying a put option or the right but not obligation to sell.
Yeah, that's exactly right. And that was what the most active traders were doing today. They were buying the 90 strike puts. They were paying about $1 a contract for that. Consider that's essentially an at-the-money put, and TLT moved more than $2 just today. I mean, there is a lot of duration, of course, in TLT. It's a long-dated Treasury bond ETF, after all, and that, of course, means that its sensitivity to long rates is going to be quite high, and we're seeing that. So that's one way that people could speculate that rates could continue to steepen. That is, that the long end will go up, even as the short end comes down.
And what about the risk reward on that kind of a trade? In this case here, you're buying an option, you're buying premium up. So it says that maybe the most you can lose is what you've paid for the option. And what's the upside?
Yeah, so the worst case loss in this case is only $1 a contract, so that's $100 because each contract represents 100 shares of the underlying. It's a little more than 1% of the value of TLT right here. In theory, TLT can fall quite sharply if rates really rose. I mean, we did see TLT fall from the absolute lows in long-term rates when 10 years were less than 1%. TLT actually fell more than 50%. We're not expecting that here because, of course, rates are already at a much, much higher level. But, it does demonstrate when you see a 20 basis point move in the long rates that you could see a 2% move or more in TLT to the downside. So it doesn't take a huge move in those long-dated rates to get TLT moving lower by a good amount.
All right, so long-term bonds in focus. Mike Khouw, OpenInterest.PRO. Thank you very much. We'll see you soon, sir.